Hey guys, what's up and welcome to a new Tesla update video. So today, as usual, let's go over the market, see what happened, what we can expect for the remainder of the week, being 2 days, of course, and yeah, pretty much just go off of that. So as usual, if you guys enjoy the video, find them useful, informative, helpful, whatever, please don't forget to hit that like button. It helps quite a bit. But ladies and gentlemen, jumping straight into it, the market just closed 10 seconds ago. Tesla ending the day down 0.8%. Putting us at $275.49 compared to the QQQ, for instance, being down 0.6%. Tesla doing pretty decently, pretty okay. You know, kind of in line, maybe very slightly outperforming, but not by much. But overall, you know, not too shabby. And pretty much exactly what we said yesterday happened today, where I pretty much said how I don't really see a whole lot of action happening today, right? For the most part, I don't really see... For the most part, I see essentially just sideways consolidation. 0.8% a day is exactly that, in my opinion. We also did rally up to the level I talked about, being, 281. I talked about how yesterday I'll be pretty surprised if, today or tomorrow, one of the days, if we didn't go up to like between 280 to 282, I'll be surprised. We clearly did that today. Now, because we got rejected, does that mean that I suddenly don't think that, we can potentially still rally upwards, to potentially come over here and retest this breakdown from one of these levels over here? Absolutely not. I would still definitely, not be too surprised if we do come up to retest one of these levels, whether that's going to be sometime, very soon, I would say even maybe, maybe this week if we're lucky, but maybe early next week, like 290 to 295 ish, somewhere in that range. I still think it's possible. Will it happen? Hard to say for sure, but I definitely would not count it out whatsoever. Especially considering you can see today's candles, right? Obviously still ultimately not, the best looking candles in the world, still looking, fairly bearishy, right? But, we are showing some decent buying pressure at this level right here, right? Which is why I have this support at 273. I have these drawn for a specific reason, right? Because that's usually where, or in theory, where the demand should be. Clearly, it's there, at least for now. The volume has been quite abysmal, unfortunately. We have collapsed pretty aggressively in volume since the split, Not entirely sure why, but completely honest. If anything, I thought maybe the other way around. But, we'll see what happens in the coming days to see if that volume can increase, especially on green days. But with all that being said and done, the fact that we're still holding this is pretty important. If we ever do lose this kind of area that we've been bouncing off of several times, essentially the low 270s, 273 to 270. If we ever lose that, then I think that's when we can start potentially falling down to the next major level, which is going to be 262, with potential small bounces in between there, somewhere around 268, where there is a little bit of support, as you can see here, right? There's a bunch of times we bounced off as support and resistance here and over here as well, around this kind of 267 level. So that, I'll put a line there just for the sake of it, 267-ish. Definitely wouldn't surprise me if we, potentially get a little bit of support there if we lose this level up here that we've bounced off of a few times already. So that's something else to, of course, keep in mind. So ultimately, though, looking at the overall trend, at least on the daily, guys, it's still very much, again, until otherwise, like we're still going to be in this downtrend for a while. Like I don't see this changing, honestly, anytime soon. Like it'll take like at least a month, like minimum a month for this to even have signs of changing back to an uptrend, in my opinion, right? Again, not financial advice, make your own decisions, do your own research, blah, blah, blah. But, it just looks overwhelmingly bearish, to be completely honest with you. Like, it doesn't look great at all, right? Especially, again, same thing with the SPY and the QQQ. Like, just look at these. Like, it's literally falling off a cliff. So it's pretty bad. It's not great at all, right? And until, again, something drastic happens, which, again, especially on the daily, it does take a lot of time for, something else to form or for it to, like, change direction or to start, going from bearish to bullish, especially when it just turned bearish not that long ago. It doesn't take, or rather, it does take quite a while for that to, really flip the trend, if you will. So that's something very important to keep in mind. But moving into the 1 hour chart, this is where we can start taking a look at slightly, shorter time frames, right? So the 1 hour chart to me usually tells me the next movement for maybe like a week ish. And when I say a week, I mean like 5 trading days roughly. And yeah, so I'll be honest, it's not looking great. That doesn't mean that, we're just going to straight plummet. Like we're still setting, the RSI is setting lower lows. I mean, to be fair, the stock has set a lower low as well, technically, so that makes sense. But the RSI just doesn't look fantastic. Again, remember when we were over here and we set a lower low and then we rallied and I talked about how this lower low over here is bad because that's a bearish divergence where the RSI makes a lower low, but the stock does not. Well, this is kind of what usually follows up, right? But now that we have followed this up and now that we are showing some support in this area, again, I would not be surprised if Tesla and the market itself has a nice little bear trap this time around, and we get a bit of a rally. Again, Tesla coming up to maybe 290, maybe even if we're lucky the high 290s as well, but anywhere in the 290 range would not shock me whatsoever to potentially revisit the breakdown from the uptrend that we were in. That's usually what happens, right? When you break out of a trend, you usually want to retest that, whether it's a bullish or bearish thing, to kind of confirm the fact that this break in trend is legitimate, if you will. And if it is, which it most likely will be this case, we will continue down. So to make it very, very simple, guys, I personally see a move something like this. Move up to one of these, somewhere around this general level up here, and then most likely further down. That's essentially what I personally see happening next. Because that will not only have a lower low, we'll set a lower high, and then probably make our way down for another lower low. So that's essentially what I am currently seeing. Moving to the slightly even shorter time frame. This time frame, the 15-minute chart-ish, give or take, pretty much tells me, maybe the remainder of the week, right? Maybe tomorrow, maybe Friday, things like that. This is why I look at the 15-minute chart. It gives me a better idea as to what we can expect moving into the next day or two. So ultimately, as you can see, pretty, not fantastic, right? As we kind of came down all the way over here, we did set a pretty low trend over here. However, as we came back down once again to even lower to 271.98-ish, which is slightly lower, about a point lower than what this low over here was. Let me just zoom in a little bit, right? Which is a little bit lower than here. You can see that our side did make a higher low as we made a lower low on the chart. That right there is a bullish divergence, which to me on the 15-minute chart, or at least this shorter time frame, tells me that it wouldn't be too surprising if the chart and the rally kind of happens very, very soon, maybe tomorrow, maybe Friday, and we get a bit of a rally up to those levels I mentioned earlier. That's essentially what that is telling me. Now, is this going to happen for sure? Absolutely not. Nothing in this market is absolutely guaranteed. You want to make that very, very clear. The idea behind technical analysis and all the stuff that I talk about, all these crayons on the screen, if you will, is simply to just understand what is the highest probability of a move happening, or a specific move happening, or direction or trend or whatever. And you want to try to understand the probability of it as close as you possibly can to essentially increase the chances, or if you will, the luck in your favor as much as possible, right? Nothing's 100%, but if I can maybe make it 80%, well, that's a lot better than just flipping a coin, is what I'm essentially trying to say. And that's kind of the idea behind this. So moving back to the daily chart, taking a look at the major moving averages and whatnot very quickly. 21 EMA, well below that. The Bollinger Band, someone out there. Bollinger Band still hugging the red line, as I said we would. I pretty much said how it would be, I expected to hug the red line for a couple of days, which is exactly what we're doing. Consolidation. Tomorrow wouldn't surprise me if there's a little bit more consolidation, and Friday we get the move. That's kind of what I'm expecting right now, where tomorrow we probably just do essentially what we did today, and then Friday we most likely get the move to the upside. Monday follows through as well. That probably pushes us to around one of these levels up here, and then probably Tuesday is where the downtrend once again begins. That's kind of what I'm expecting right now. Again, we'll see. Of course, it's extremely difficult to predict the timing on things. That's really, really hard. So we'll see how accurate I am on the timing. But in terms of the move overall, that's kind of what I wouldn't be surprised to see. The 50 moving average, we're getting awfully close to it. It's out, and we're getting close to it, and it's getting close to us because it is slowly catching up to us, right? As each day goes on, right? 200, of course, forget about it. And then last but not least, guys, we have the short-term moving averages that kind of dictate short-term bullish or bearish momentum, which still tells me that we are looking somewhat bearish. So pretty much, I wouldn't be surprised if we move above the 5, probably get closer to the 10, probably get rejected around the 10-ish. If we get above it, I personally think it'll just be a simple false breakup to the north side of, again, maybe like 293, maybe even like, 294. And then we probably get rejected, and then we probably fall down even further. That is what I'm seeing. That's my prediction. That's my analysis. And that's kind of what I'm seeing. And ladies and gentlemen, taking a very quick look at the VIX. We haven't looked at this in a while, but I did talk about how, it just looks like it wants to bounce really soon. That's exactly what happened, right? It bounced quite aggressively. I kind of wish I played calls on it, but I don't like playing calls on stocks, or I guess it's not really a stock, but you know what I mean. On stocks, we'll just say, that have double-digit price numbers, because it means that the stock has to move pretty aggressively for the option to make it, anything worthwhile. and you have to pay commission per contract. I don't like doing that personally. It's not my kind of thing to do. However, the VIX did make a beautiful bounce. You can see as we came above here, we got rejected by this kind of zone over here, fell back down to this red line, which was, overall support. Now became support once again. Before here was resistance, and now we rallied above it, and now this old kind of rectangle, if you will, that was resistance is now acting as support. It's just simple. It really is sometimes that simple. All right. So as long as we hold this, I think the VIX is going to overall look to make a move even higher. Wouldn't be surprised if it maybe falls down a little bit more, maybe to the bottom part of this rectangle, to like 24.5-ish, and then probably rallies off of that. And then taking a final quick look at the indexes, the SPY, the QQQ. I mean, just looking quite hideous, in all honesty, quite hideous. Now, this doesn't mean that we can't get a quick rally just for the simple case of being essentially oversold. One thing you can do here is you can also go ahead and put like the Fibonacci, and you can see we are actually below the 50 moving, or the 50 retracement of the Fibonacci, which isn't great. So there's technically a chance we run down to the 0.618, which is going to be putting us around 390. But I would say that's the worst case scenario for now, before we get a bounce, because I do expect a bounce coming to the SPY and the QQQ relatively soon, mainly because it's just so oversold. It's just way too much. It's quite aggressive at how hard it fell. I actually had puts up here, and I closed them out for like extremely little profit, which I'm obviously extremely sad about in hindsight, but it is what it is. And then the same with this with the QQQ. I wouldn't be surprised if the QQQ, like I said earlier, does get a quick rally, maybe to like 307. If we take a look in the 1 hour, it makes it a little bit easier to determine this. But like I said, maybe 307 to 313 would be the two levels I'll be watching for the QQQ to rally in the SPY. Similar case around 405 to 412, right? And again, if this happens, if for instance, if the SPY goes to 405, Tesla most likely goes to like 387 or something like this up here, 385, 387, something like that. If the SPY and the QQQ go to the next level, like I just talked about, being around 412, and for the QQQ somewhere around 13, 14, somewhere around that general level, to me, that means that Tesla most likely will probably come up to like 293, 294, right? That's essentially the way I look at it as of right now. So yeah, that's my analysis. Let me know what you guys think down below. If you have any questions, whatever, let me know down below as well. But thank you all so much for watching, and I'll see you for the next one. Peace.